Family Credit Management is a non-profit credit counseling agency. We specialize in helping people take control of their debt.
People call in every day. By the end of the call, they're feeling better. They know there's some hope out there.
For over a decade, Family Credit Management has helped tens of thousands of Americans deal with the burden of debt.
If you're struggling with debt, the most important thing is to take control of it. Now's the time.
Good afternoon and welcome back to Family Credit Management's Half Hour. I'm here to discuss all sorts of different things as far as budgeting and credit counseling. My name is Laura Butler. I am a certified credit and housing counselor with Family Credit Management Services. I've worked there for over 12 years helping consumers in all sorts of different facets. Of course, again, we do work at Family Credit Management Services, and this is a live call-in show. You're welcome to call in. The phone number to reach us here is 312-738-1060. And then, of course, you can always call Family Credit Management if you feel that you have a question that you'd like to be answered, maybe not on air. That number is 800-994-3328. Extension 141 is my extension, but you can call and talk to anyone there. So we've been discussing over the last few weeks different sorts of budgeting styles, and again, I like to call it a spending plan instead of calling it a budget. I think it's a little bit less threatening when you're talking about spending plans as opposed to something like a budget. No one likes to talk about budgets. So in keeping with the same theme, I do have a presentation kind of put together for you, and today or this week we're actually going to be discussing something a little bit different that's going to make things easier for you, hopefully, to budget. And basically, it's a way that you can use your checking account to work for you that will make your budgeting life and spending plan a lot easier. So that being said, I'm going to pull this up here really quick, and then. Okay, so I want to just recap a little bit about last week. Of course, week one, when I was here, we were discussing the importance of spending plans and finding your style. I did discuss, just trying to figure out what's the best thing for you, whether it be using a notebook or, an app, using something like the Excel, whatever you find comfortable, whatever you find that fits your style. I think it's important to first of all start with that because that's really the basic foundations. How are you going to be tracking your expenses? How are you going to, keep in touch with the needs that you have? So, finding your style, of course, is always going to be the first and foremost, sort of step. So week two, I did discuss, which was last week, SMART goals. SMART goals, of course, are being specific, measurable, attainable, realistic, and timely. I did use the example last week of, saving money, and that's always kind of the building block foundation is having a generic basic goal and then building upon that. So, instead of saving, you say you want to save money, what you'd like to do is save, $500. I'd like to save that by October 2017. I will accomplish this by saving $39 in a checking or savings account over the next 12 months. That way you made it, and you can even take it a step further by making it relevant and saying that the reason that you want to save this money is for a specific reason, like a vacation, or maybe you've got pets that you'd like to save up for their vaccinations, or you've got children who are going back to school at a certain time of the year. So, that's always good things for you to, make it so it's relevant, make it so it means something to you. So, now that I've recapped, I'm going to get into the bulk of what I'm going to be talking about. And what I'm talking about today is, you can call it whatever you want. There's lots of different names, I guess, for it. I call it the bill pay spending account plan, or method, if you want to call it that. But basically, you're going to have two different checking accounts, and it will make life, at least when I did this, infinitely better. So these are going to be just, some steps on how you can do this. Again, make it personal for yourself. If this isn't something you choose to do, you don't have to. My hope is that this will be an easy method for you to maybe take advantage of, and maybe it's something you haven't heard of or thought about doing. So why two accounts? First of all, it's easier to budget with a smaller amount. This method basically is taking your bills into one account and your spending into another. So what you're budgeting is the amount that you're going to be spending for groceries, gas, things like that, like fun. It can also help reduce fees from bouncing checks or overdrafts. When you've got all of your accounts coming out of one account, sometimes it can become difficult because, you've got your mortgage and you wrote the check, you mailed it in, and it's going to be a few, days, sometimes even a week before they cash it. And then you went out and you said, you know what, I need to buy, I don't know, something that came up. Maybe you had to take your dog to the vet. I have a pet. This happens frequently. So maybe you had to take your dog to the vet and you wrote a check to the vet and you didn't realize that, oops, I forgot about, my mortgage payment that's going to be coming out in a couple days. I thought I had enough time for this one to clear before I got paid again, and it didn't happen that way. If you do 2 different checking accounts, one of them is designated specifically for those expenses, like your dog or your kids or, something that you want in life. And then the other one is designated specifically for your bills that have to be paid on time every single month. So it also helps you streamline how you budget. And it's a simpler way to pay your bills. So it's not only an easy way for you to set up your spending, but it's also an easier way for you to pay your bills because you know that they're set. This is what I need to pay, and we're going to use a calendar to, show you kind of how to do that. So how are you going to start doing this? The first thing that you should do, and again, I would like to just mention, make sure you call in if you have any questions. Even if it's not regarding this specific topic, you're welcome to call in. The number to reach me is 312-738-1060. Or you can always call, Family Credit if you wanted to get your questions answered offline. So how are you going to start? First thing, you should sit down and talk to your banker about opening 2 accounts. They must be connected for transferring. That's important. I always think it's important to keep those financial professionals who know what they're doing in the loop with stuff. So if you're planning on doing something like this, it's good to have them with the same bank. That may, maybe make it easier. They might not charge any fees for you to do multiple transfers. They also, want your business. So if you're sitting down with them and you're making, a plan and opening up another checking account, that's something that they are usually interested in doing. So you want to make sure that it's easy for you to transfer the money back and forth between the different accounts, because this is something that you're going to hopefully have set up with your employer where you just have one checking account and you can have all of your money deposited into that account, and then from there you would transfer this, the funds. So the second step would be for you to designate one account for spending, so groceries, gas, fun, things like that. And then designate one account for bills. It's really important not to have a debit card attached to the account that you're doing for your bills, because, or you can leave the card at home. The reason you want to do that is, this is not an account that you should be using to spend. So you're going to be writing checks out of this account or doing automatic withdrawals, or you can set it up where it's a draft, or you can, I like to do my online payment every single time I get paid. I don't like having a lot of things come auto pay or auto withdrawn. I like it, having that control. So I would say that leave the card at home, don't have anything attached to it, but you still have to be able to access it, just not with a debit card. You're not taking any money out of this account, you're not using it for savings or anything like that, so don't have anything attached to it where you can easily take the money out in cash. And the last thing is what you want to do is create a calendar of your choice, and you can set it up with recurring appointments, with the bills that you want to pay on that period. So you can use Google, a paper calendar, an app, whatever you decide to do. It's completely up to you. I, again, like to just, repeat myself that, this is personal. Budgeting, spending plans, those kind of things are personal. So you should always just take that into consideration. It should always be something that, really means something to you. And so, using either a Google Calendar, a paper calendar, something like that, it's completely up to you. I like to have my Google Calendar. I can use it on a PC. I can use it on a tablet. I can use it on my phone. It sends me reminders. So I'm going to show you an example here in just a minute of how I set up my calendar to show you how you can use this for yourself too. So, once you complete these steps, the next thing for you to do is you can set up the calendar. And it looks like we do have a caller, so I'm going to go ahead and take the call before we go into the calendar. So go ahead, caller.
Hello.
Hi.
Hi. So I wanted to ask, in terms of your credit cards, how much should you spend relative to your limit? I was told that you should never spend more than 10% of your limit, but then someone else told me it was actually closer to 30% of your limit, and I just wanted to get clarity on which was more accurate.
Sure. That's a wonderful question. Yes, people ask that question of me all the time. Being a credit counselor, it's something I deal with almost on a daily basis. But, there is no right or wrong answer there. Typically, it's 30%. If you use your credit cards actively, try to keep it under 30%. But 10%, the people with the highest credit scores usually utilize 10% or less. So if you want to make sure your credit score is the best it possibly can be, you definitely want to make sure that you're spending 10% or less, but no more than 30%. If you get over 30% of your credit line, then it starts to pull your score down. So if you're at 10%, you should be good. Once you get up to that 30% threshold and start going above it, that's when it really starts to affect your credit score. So that's a great question. And please, more people call in. I really appreciate, the calls that you guys do. So 312-738-1060 is the number to reach me. And again, I can talk about any sorts of things, budgeting, credit related, even housing related questions. I am a foreclosure prevention counselor as well. And I also do pre-purchase counseling and reverse mortgage counseling. So going back to the budget that we were talking about, or the spending plan we were talking about, and setting it up in your calendar, you can do Google, and this is all I did was a screenshot here. So I wanted you to be able to see kind of what I did. So this is very, very similar to kind of what I do. As you can see, this is set up for October. So I have my paydays set up, and the cool thing about Google Calendars, or any sort of calendar, even Outlook, is you can set it so it's recurring. That means that it's going to show up every 2 weeks. I get paid every 2 weeks. So I set it up as my payday every 2 weeks. And so, you can see here that I've got bill pay, and then I've got my payday. So in order to make this seamless for me for my for setting it up for the bill pay spending account, checking accounts, I'm going to track all of the things that need to be paid on a monthly or weekly basis or bi-weekly basis, like the big things. So the stuff that needs to come out of that bill pay account. So once I have it kind of tracked in there, I'm going to show you kind of what this day looks like. So I set it up as half my mortgage payment is due, because I get paid bi-weekly, so I'm saying that half of my mortgage payment is going to be coming out on this day, and this happens to be the end of the month, which means that the beginning of the month is coming up here pretty soon. So I'm actually going to be paying my mortgage. So chances are the 2 weeks before this, I probably had $500 saved already. So a total of $1,000 is what I'll be paying out to my creditor. I also have a gas bill that's due, cable bill, water bill. So the total out of my check that I need to make sure that I transfer from my account into my bill pay account is this $725 right here. So that is what I would make sure that is done. I would transfer that, and typically what I would do is do that at the beginning of the week. I get paid on Friday, Sunday, maybe I would sit down during breakfast, or whenever is convenient, comfortable time for you. And I would sit down and maybe spend 15-20 minutes making sure, okay, this is the things that I need to pay, and then going ahead and transferring those amounts for the end of the week. So to show you kind of what I have for the recurring is the next calendar. As you can see, this is the following 2 weeks. And what I have set up in that particular day is I've got saving $500 out. Let's say I've got maybe a loan payment or something like that, like car loan, cell phone, electric, and then so the total on my paycheck is $830. As you remember, before it was $725, this time it's $830. So it's kind of showing you that, it's evening the amounts out too during the week for you. That's the problem a lot of times when I look at someone's spending plan or someone's budget. I'm looking at it and I'm saying, you know what, you've got a lot of money going out on one specific time of the month. Typically it's the beginning of the month or the very end of the month because of the fact that you've got rent, mortgage, maybe you don't have a rent or mortgage but you still have tax bills or insurance that you have to pay because your mortgage is paid off. But you still have to make sure that you've got enough money to be able to cover those expenses. Splitting them up is a great way to do this. Now, if you get paid monthly, it's a little bit more difficult. You're on a fixed budget. This may not work for you as far as splitting things up, but still using a calendar for this is going to be a great thing for you to do. And using the bill pay spending account method is also a great thing for you to do as well. So I've split things up a little more evenly. Yes, I have a little less out of this second paycheck, but if I wanted to, I could even split that loan payment up, $75 this week, $75 the week before, and that would make it even more closer to an even total. This is something I do myself, so this is why I teach this. I think it's a great method. Ever since I've done this, when I was younger, before I started working at Family Credit, I've had some late payments. There was times where maybe I had some fees for my checking account. This method has made it so I've never had any issues. I don't even remember the last time. I mean, it's been probably 15, 20 years before last time I had a fee, and it's because I use this method. So now that you've seen the calendar, I'm just going to, little reiterating on some of the steps. So each pay period, you're going to review the bills for that week. You're going to check the amounts are correct on the budget and adjust accordingly. So the reason I say it like this is simply because there are times of the month where you may have, your gas bill. Your gas bill might be a little bit higher. I'm on the bill pay plan for my gas bill, but sometimes it's a little bit higher in one time or another. And so if I have to adjust it, then I'll go ahead and I'll do that. And of course, I want to make sure that everything's paid on time. It looks like we do have a caller, so I'd be happy to go ahead and take that.
Hi, how are you?
I'm good. How are you?
Good. I'm wondering, have you ever heard of banks? They have auto pay for your mortgage payment, which includes the interest as well as the principal.
Yes.
Have you ever heard of? And I want to do an extra payment towards my principal each month. Do banks ever allow like an auto pay that goes to the principal as opposed to the interest?
Okay, that's a great question. And being a housing counselor, that's right up my alley. So I'm glad you asked that. It's very difficult when you're dealing with paying extra to a mortgage company. Typically, they won't do an auto pay for that. I don't know of any mortgage companies that do. You can ask your mortgage servicer if that's something that they do have set up. The problem is when you pay extra to your mortgage, you have to be extremely careful and diligent about how the money is applied. When you're a servicer for a loan, typically their job is to take the money and apply it, and if the amount is any different to the penny on what you have, what your normal mortgage payment is, they don't know what to do with that half the time. They'll take it and they'll put it into a suspense account. So you want to make sure that if you are paying extra, you need to physically talk to someone at that bank. Call them, whatever you want to do, and tell them, hey, I'm paying extra. I would like this amount to be applied to my principal. And then you need to follow up with them and make sure on your next monthly statement that they did that correctly. There's too many times where I see people think that they're paying extra on their mortgage and it's either sitting in suspense. I've had some people think that they were paying their mortgage ahead, maybe making extra payments, thinking that, if I pay October and November, then I won't have to make another payment until December. That's not true either. Typically what they'll do is they'll either put it into suspense or they will apply it to your principal thinking that you are paying extra. And that's typically why the lender doesn't apply the amount and they'll put it into suspense because they don't know what you or what your intentions are with that. That's a really great question. And yeah, if you do that, you just need to make sure that you call in, note who you talk to, what time you talk to them, the person's name, any sort of identifying information, and then just make sure that you follow up on it. All right, so in continuing with the spending plan, again, I would like to let you guys know if you have any questions, please call in at 312-738-1060. Or you can always call Family Credit directly. The phone number to reach us is 800-994-3328. So, once you made sure that all of the amounts are correct on the budget, then what you want to do is you want to, go ahead and set the transfer up for the day that you're paid through your bank for the amount that you need to pay your bills. So in the beginning of the week, what I would do is I would say, okay, I need to transfer $725. I would go into my banks online. I would go onto the website for them. And then I would go ahead and program it to say $725 will come out on Friday, October 27th or 28th. And then once you do that, then you're going to go in and program the payment for the bills for that pay period on the date that you're paid. So, I know that I've got to pay my mortgage payment because it's the end of the month. So I'm going to go ahead and program that. And the cool thing about doing something like Google or doing things online is you can copy and paste the transaction number or the number that they give you for the confirmation, and then I usually will copy and paste that into my calendar so that way I can see that, oh look, I have proof of it. I've got the date, I've got the confirmation number, I've got the amount that I paid, and what account it came out of. So that way I can track that further. And then once you're done with, programming all the payments, then you just want to review the amount that you have left to budget for your flexible expenses and your fun money. That's why it makes it so much more simpler. All of your bills have been paid. Everything is in the account. You don't have to worry about it. And so, just moving forward, all you have to worry about is that little amount. So relax and enjoy your newfound method of budgeting. There is another method that you can use if you've got a family, and maybe this doesn't sound, like it would fit into your lifestyle. Maybe you've got a family, maybe you've got a spouse that you would like to do something like this. It's the same idea as the bill pay spending method, but it actually consists of 3 accounts. It's called the his, hers, and ours method, or whatever you'd like to call it. And so basically you have a joint household account. Everything comes out of this. Your bills, your gas, anything that has to do with your household comes out of this account. And then he gets $100, she gets $100. Or it could be he gets 50, she gets 50. However you decide to put this. And they can spend it on whatever they want. It doesn't have to be something that has to do with the household. If maybe they want to go out to lunch every single day and you don't want to go out to lunch every single day, what you can do is you can have it designated. So you know what? You get your own spending money. I get my own spending money. Everybody's happy. This makes it a little bit more fair. Everybody gets the same amount, regardless of how much money they bring in. Maybe she makes more money than he does, and to make things even, you guys still will have $100, put into the account, or $50 put in the account, or $25. It doesn't have to be this amount. So it's called the his, hers, and ours method. It's something that is talked about. Oop, I want to do this. Okay, in our spending guide, and I talk a lot about this, of course, because I think it's something that is a neat thing that we offer, and you're welcome to call in if you want any of this information. You can call in and talk to one of our counselors. I would be happy to send this guide out to you. It's called the Personal Finance Made Easy Guide. So in closing, this is a quick half hour, so I would like for you to just check us out. If you do have any questions, you can always call us at 800-994-3328, or you can also find us on Facebook, Twitter, YouTube, and Instagram. And again, I'd like to thank you, for calling in, for those that called in, and everyone who's watching. I appreciate it, and we'll talk to you next week. Thank you.